Hello, everyone, and welcome to TradeFinder Live. My name is Zach. I'm one of the team here at Elliott Wave Options. Most of you are likely familiar with me by now, but if you are new or joining us for the first time, welcome. It's great to have you on board. We have to go over some important housekeeping details about the session, and then we will get to the good stuff, aka Mr. Rob Roy. So first and foremost, this is our live disclosure disclaimer agreement. If you've attended any of our live sessions previously, and you've seen this, the main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. We have this available on our website, so you can read it in full detail at any time there, or please feel free to take a screenshot of it now if you like, but that's the main point to take away. All right, again, most of us out there are likely familiar with the Q&A process. The general presentation will be Rob presenting for 45 minutes, going through some case study considerations, and with the time remaining, we'll open it up to questions. We always have so many good questions and just limited time. So again, if we don't get to your question, it has nothing to do with the validity. We just only have so much time. Take that as encouragement to attend the insiders meeting when we have a 45-minute Q&A portion, and obviously a much higher likelihood of getting your question addressed in that session. So that covers off all the housekeeping details. Obviously, the market loved the CPI report that came out lower than expected today. And yes, the song remains the same. Yields came down and the market took off. So let's see what Rob has to think about that. Excited to be back here with everyone, and especially back here with you, Mr. Rob Roy. How are you this evening?
Good, Zach. How are you?
And I'm doing all right. I'm doing better.
As everyone can see, I am in the mountains, made it back, and apologize for missing last week. Had a bout with that all Mr. COVID. Crazy. And as much of a cold for 30 years, and then got COVID a couple years ago, and wasn't really much of a big deal. And then got it this time. I kind of thought that the second time you got it, it was supposed to be less than the original time. Didn't work out that way for me, if that's how it's supposed to be. It kicked my butt pretty good this time, and I want to let everybody know ahead of time, I will do my best to get through this entire hour. I've got my throat coat tea and honey. I've got a throat lozenge in, but it really attacked my throat, and had a live show on Monday that I had to cut short yesterday. So I'm going to try to get through it, but just fair warning ahead of time that if the throat gives out, then we'll have to stop. But I didn't want to miss another opportunity. And from what I understand, Zach, you got it too from what I was told. You were out last week as well.
I'm traveling through the airports, and it apparently has resurfaced. I thought we had put this virus to bed, but with the change in seasons, I guess there's some mutations that are making their way around and found both of us apparently. So yeah,
I thought it was done too. Same thing though, traveling through the airport, and then on the YouTube video. And by the way, if you haven't seen it, we did hit the 40,000 subscriber mark on the EWO channel. Thank you so much for everyone that did that. We did give away and noted those 4 subscriptions. So we kind of like the way that played out. So keep an eye on the market updates for some exciting news that I'm going to share with you this week on a new plan that we're going to do each and every month on the EWO channel. So if you haven't registered on the Hub Financial channel, that's where we do a live show on Friday. So please register there as well. So anyway, congratulations to the winners. If you're watching tonight, welcome. And those of you that didn't, we do appreciate your participation in the comments, and we do like the community that we have there on YouTube, as well as everyone that joins us each and every week here on TradeFinder. All right, so with that, let's go ahead and take a look at the market. As Zach mentioned, we did have a favorable reaction to the CPI report. The headline number came in flat, which was better than expected. And the core number came in lowest it's been in over 2 years. So that was something that the market obviously just went crazy on. bit surprised that we went this high to the upside. I wanted to show you the zigzag pattern. We've seen this before, but since we were off last week, I just thought I would bring it up again. Where we came down to 410 was 161.8% extension on the C wave to the downside. It was a logical point to mount some sort of a bounce in the market, in addition to the fact that we had some consolidation going back pretty much all year in February, April, and May. So the fact that we bounced off that 161.8% level at 410, not surprising. I do think it's a bit surprising at the velocity of this bounce. It's pretty vertical. We had these two gaps here on the original bounce, and then we got up to 440, which is where the next point of potential resistance was. And you can see we kind of sat there for 2 days. That was it. And then we get that CPI report. And if you're wondering, well, why is that such a positive for the markets, especially when we were talking, if you watch the U.S. market update, we got a couple of really smart bond guys and Jeffrey Gundlach and Bill Gross saying that we're going to have a recession at the beginning of next year. Well, what normally happens when you have a recession is the Federal Reserve looks to start cutting rates. And so adding liquidity is what the market is looking for. If you're wondering why this move is to the upside when these really smart people are forecasting a recession, remember the market always looks 6 to 9 months ahead. So they're looking past the point of, yeah, we're going to have some recessionary numbers come in. They're looking past that to where the Fed may actually start cutting rates again due to the recession. That's driving this market to the upside. And so you can see with this big gap. So if we put the 10-day moving average on, we are quite a bit overbought from the 10-day moving average. At this point, we were already a little bit overbought, even though we kind of consolidated for a week here, coming off that bounce from the 410 lows. But now we have multiple gaps. We have 2 gaps here, and then we have this gap here. I think let's just pump the brakes a little bit here on the enthusiasm to the upside, and let's see what plays out with rectifying this overbought condition. You can see that the Elliott Wave button is on, and there is no labeling here, so we are not in a 5-wave impulse pattern, which means that this move here is an impulse move of some kind. So how far is the correction going to be? How far is this initial impulse move going to be before there's a correction? That's the most difficult part within these Elliott Wave patterns. Everyone, if you've been watching, knows that a 5-wave impulse pattern starts with a zigzag. We talk about zigzags a lot. And the hardest thing to figure out is where is the A wave of a zigzag going to end? So it appears that's where we are right now. And we'll figure out. The market will tell us. I guess we won't figure it out, but the market will let us know. You can see we had a bit of an expanding triangle here. So we had a complex A wave there, which means the B wave could be simple. I mean, it could be a quick move down. At some point in time, we are going to have a corrective move. We could go higher. We could go all the way up to this recent high from July at 460 before we correct. I just feel like that's probably less likely with the fact that we have all these gaps and the vertical nature of this move. If you've been watching any of these recordings, you know I don't like it when things go vertically to the upside, because oftentimes they come vertically back down. So no doubt the market liked the number. They felt that it gives the Fed the opportunity to stop the rate hikes, no more rate hikes, and then look forward to rate cuts. That's the bottom line. And then, as Zach said, the song remains the same. Big move to the downside in rates, along with that softer than expected CPI report. But look, the wave 4 is only at 33%. So, I mean, we haven't even hit the 38.2% corrective move yet, and we still have a wave 5 forecast here. So again, before we get too giddy on what's going on with the market to the upside, let's just remember that there are still things out there that could move us back to the downside. One of those being this wave 4 holding and interest rates turning and moving back to the upside. And that could happen as we start to get some of those numbers that do show that perhaps we are moving into a recession in the markets. But the thing that interested me the most today was not just the 10-year moving down. That kind of makes sense. But look what happened with the dollar. Big move to the downside of the dollar. So, we had gone through this consolidation. So you have a big move down in rates. You have a big move down in the dollar. Obviously, that is a ripe environment for the market to move to the upside, and then add in the fact that it was caused by a more calm CPI number that gives the Federal Reserve the opportunity, if they choose to be a bit more dovish, back off, take the foot off the brake, as some people were putting it on the financial networks today. So all those things led into that big market rally that we had today. But the fact that the dollar moved down like this, I found that quite interesting. Yes, of course, raising rates does support the dollar. I got that, understand all that. My point is, didn't really necessarily want to see the dollar move down this significantly. There's been a lot of chatter throughout the networks on the amount of debt that we're holding here in the U.S., and at some point in time, that's going to come to roost. And so we need the currency to stay fairly strong, as I mentioned numerous times over the last year or so. I'm in favor of a strong dollar, just not very strong to the point where it hurts international companies from an exchange rate standpoint. So I was really surprised at how big of a move to the downside that we had in the dollar. That was a little surprising to me. So then we take a look at the VIX, and we are in the lower end of the range. So once again, let's not get too excited to getting to the upside. We've had a number of nice upside positions over the last couple of weeks that we've taken quick gains, perhaps quicker than we would have normally. Didn't wait for our price targets to get hit, but we nearly made 50% on Micron technology in one day. Now we're going to take that every time, regardless, but it still wasn't the price target as illustrated by the pattern. But when you have those kind of moves and you still have the uncertainty that's in the underlying there, you want to take those gains when you have them. They're right there. Take them. That's a great gain, regardless of what you were looking for initially. When you make it to 50% in one day, you're just going to take that, which we did. So we're down here now, down towards 14. That's an area that's acted as support on the VIX. Do we continue to bounce back off this level? Can we break below it? Do we break below what has been holding on the lower end down here at 13? Do we break below that and start going down towards 10 or 9? And we've been there before. So we'll see how all that plays out. I'm going to quickly go over the other markets. Won't spend too much time here because the charts are all going to be roughly the same, as you can imagine. There's the Dow, the DIA, also running nicely to the upside, but also with that big gap move there away from the 10-day moving average, overbought short term there. The Qs, I know everybody's always interested in what's going on with the Qs, and as you can imagine, a big update today. Best looking chart of all the markets, in my opinion. And if we put the Elliott Wave pattern on, you can see, again, no 5-wave pattern. So these markets are in the first impulse wave of whatever is going to be occurring here. Not quite as overbought as we are on the SPY, but still a little bit. And notice that the gaps are a little bit smaller back in here, but still there nonetheless. And then the gap up today. And we're at the area where this is, if we break above 390, we could really be off and running on the Qs. But I don't think if you're bullish on the Qs, which I know a lot of you are, that you want to see that happen within the next couple of trading days. We're already overbought. We're already very vertical. And what ends up happening is when you break a point of resistance, when you're already extended, it doesn't hold. So what we want is some consolidation here, backing and filling. Let's just spend a little time here under this 390 area. Let things calm down, let the energy build back up, and then make our break above 390, and then perhaps we have a chance to have a sustained run higher. But if we were to run above that 390 level over the next trading day or two, as I said, I just don't think it holds. I think it turns around and comes back down, and that's not what we want. Looking at the IWM, that was just really on the brink of Armageddon here, falling apart. Just the last bastion of potential support there at 165 managed to hold, but note it's still in a qualified 5-wave to the downside pattern. So we did have a move up. The wave 4 is almost at 50%, and other than today, we were kind of drifting back down on the IWM, even as the market, the S&P was moving to the upside, but we did get a move higher today. We did break above the 50-day moving average, but we are overbought on the IWM. We have a big gap here. We are above the 50-day moving average, which is important, but unless we disqualify this 5-wave pattern, we're looking at the potential of the IWM moving lower. So again, enjoy the moves to the upside today. We've enjoyed several nice bullish positions, but let's just not get ahead of ourselves in thinking that we're all clear. Everything is go to the upside. We're not at that spot yet. Looking at Bitcoin, which had a really nice move, backed off a bit today, so right around 35,000, and that's okay, because once again we were getting a little bit vertical there. As you can see, we closed dead on the 10-day movement, and I know trades 24/7. There's not actually a close, but just like with the futures, etc., they do give us a closing quote closing price for end of day data charts, and you look, and the 35,000 is an area that we want to see. If you're bullish on Bitcoin and the cryptos, you want to see that hold. That's a really nice area to hold and go sideways, and then see if we can take off and make another run. The only thing that really concerns me about this is this break was vertical and really hasn't been retraced. And I wish it wouldn't have done that. I wish we would have just had more of a 45-degree angle move, but it didn't. It went vertically. It consolidated for a bit, took off, tried to go again, couldn't do it. Right back to where we were in the consolidation, and we'll see if that 35,000 can hold. Maybe we need to go sideways for a few more days here, and again, gather some energy to try to take another run back to the upside. A couple of stocks that everybody asks about all the time on the Hub Financial Channels live update that we do, our live show that we do every Friday at 2 p.m. Eastern time. Invariably somebody asks about Coinbase. Y'all ask about it in TradeFinder here as well, and mentioned that getting above 80 was a big deal, and as long as we stayed above 70, I thought you could stay long Coinbase. That worked out well. Getting above 80 was key as far as a potential move. Interesting thing here is that even though we backed off a little bit more on Bitcoin today, didn't really hurt Coinbase too much. So I'd mentioned that I felt like if Bitcoin took off, it would drag Coinbase with it, and that was the most bullish scenario there. Now, technically, we are still barely qualified in a 5-wave to the downside pattern here. So be cautious of that. But we're awfully close to disqualifying this 5-wave pattern. In fact, if Elliott himself was here, he would say, hey, we're at 70%. That's probably going to be disqualified. The likelihood is that it will be, but it's not yet, because there's still a fib level at 78.6%. So we still have that in the back of our mind. So, be cautious. Take what the market's giving you, take the patterns that you have, but when you have these larger patterns in mind, be cautious, be careful, and don't get too excited on moving to the upside. I did want to show, we haven't looked at Australia here in a couple weeks, and the fact that we were getting so close to just literally Katie bar the door time here on the EWA, but it held. It held at just under 21, and we moved to the upside. Now, the interesting thing here is that looks like the 5-wave is finished to the downside. It didn't extend more than 100%, which means that you expect the corrective move to go back to the previous 4, and we're almost there already. So even though we've gapped up here and we're a bit overbought, it seems like 22.5 is in the cards for the EWA, and then we'll see where we go from there. Looking at India, which had been so strong for so long, and then it looked like it was giving up the go. Look what happened. All it did was go right to the 38.2% fib retracement level on the wave 4. So if you wonder why we look at Elliott Wave, we look at these Fibonacci levels, we show you the stuff each and every week because it works. So we come down here. Is it a coincidence that we bounced off 38.2? I don't think so. I think that that's a logical point where it could bounce. And then it ran back up to 44, which was key. We didn't get a chance to talk about this last week, but we ran up to 44, went sideways, and then, pardon me, with the U.S. market today, we took off to the upside today. So it looks like the INDA is back in business and wanting to move higher from here. Looking at our previous case studies, obviously we didn't have one last week because wasn't able to be with you. Would have much rather been here than what I was dealing with. I can guarantee you that. When we take a look at Qualcomm, which was one of our case studies, and this goes back to September 26th, and we were going sideways through. Watch what's happened with Qualcomm. I hope you followed this one. I hope you had this one in your portfolio because that's a nice move to the upside there. And with this gap up today, we have a doji. I think that's a pretty good time to take a gain. So we're going to say with a little bit of a overbought scenario here and a doji, we're going to cross off Qualcomm, and that's yet another winning position that we've looked at throughout TradeFinder in our case study considerations. All right, now one that hasn't worked out well is BP, and we looked at that one back on October 17th. Had a little bit of a vertical move here, probably got a little aggressive on this entry. We probably could have waited a little bit. Still didn't expect to see it correct that much. We are starting to creep back to the upside here. And this is the area that needed to hold to stay long. BP, it's held barely. So I think we can hang on here looking into January to see if we can turn and move back to the upside. If we do move into a recessionary period, maybe that squelches the potential move higher. If you're wondering what's happened, my expectation was that these oil companies with oil being higher were going to report fantastic earnings. They did. But the problem is almost en masse, they all gave very cautious guidance. Now, is that just an under promise, over deliver type of thing? Apple's famous for that. Some other companies are famous for doing that. Or are they really concerned about what a recession may do to the demand for oil? Even though OPEC is seemed very determined to keep the price higher. And if the demand drops, they simply drop the supply production. But we did move back down to support. As long as we can hold 35, I think you can stay long. BP, if we break below that, then I think all this falls apart and you take that off. MPLX, we looked at also at the same time on the 17th of October, and we have moved down to 35, also a level here where we need to hold. If we wouldn't have, you can see the consolidation through here. Had we broken 35, this would have been just take it off and take the loss and go. But nice bounce today. Can we follow through with that? Or is that just simply with the market today? But we were at support right at the 61.8% fib level on the way forward. So let's give this one another week and see what happens next week. Maybe we say, just write that off and move on. But it's worth giving a little bit more time. And then last but not least, we had GLD on the 24th. Again, we've been waiting quite some time for an opportunity to put a bid on the metals. And notice that what happened here. See how we had a 5-wave to the downside pattern? We were at the 78.6% fib level. So it did look like this was going to relabel, and it did. So far, so good on GLD, holding at 180, which is where we need it to. But we really need it to break above 185 because really, for all intents purposes, we're in a tight range here on GLD between 180 and 185. If we can get above 185, then I think maybe we're off and running. It is encouraging that 5-wave pattern did go away. It did relabel, which is what we thought was going to happen. So hanging in there on GLD. This is a bit of a longer term look here, not necessarily a trade, more of a position for the longer term. So nice moves to the upside today on both GLD and SLV if you're watching those. So we'll keep those in mind. So we keep the other three, but Qualcomm certainly you would have wanted to go ahead and take that gain at this point in time. All right, so let's see if we can find some sort of a case study consideration for tonight. And my goodness, when you have a move like today, you expect, look at this is maybe the most I've ever seen on my impulse search. 8 to 10 is usually a lot. 3, 4, or 5 is usually what I get on a daily basis. 24 results is insane. Again, probably the most I can ever remember. And we have to keep in mind that we had an extraordinarily strong market today. Big move to the upside. A lot of stuff is overbought. So, again, let's keep this calm. But the one I wanted to look at is now shown up 3 consecutive days, and that's MPWR. Now, the only issue here is the fact that we gapped today, which is very frustrating. I don't like the gaps. But when you look at all the other, see the above average volume, that's what we want. And then we have the oscillator moving to the upside, which is telling you short-term momentum is good versus longer-term momentum. CCI, not at an extreme point high. The DMI, very strong. There's nothing not to like on this MPWR other than the fact that we gapped today. But I am going to put we actually may send this out as an alert to our subscribers at EWOTrader.com tomorrow. The only reason we didn't do it today is you don't want to chase moves like today. You want to take things off, which is what we were doing. We were taking profits today, not adding new positions. You don't want to put something on when things are going crazy to the upside like this. You have volatility in the call options that moves up. You have the likelihood of calming down a bit. So we calm down, volatility comes out. Normally you can find a little bit better entry. I don't know that we come back and fill that gap right away, but it's unusual to see the same stock show up multiple times on the search the way I have it set up. So the fact that it's doing that, we're going to take advantage of that. So for today, 11:14, our case study consideration is going to be MPWR moving to the upside here. Once again, no 5-wave pattern. So where do you look? The first stop is going to be at that big round number of 600, which coincides with the highs from July. So hopefully we get a calming morning, and so we get a better opportunity than we would have today on the entry. So we're going to look for that MPWR to move up to 600. Now, just as a note of caution, when you're looking It's not the most liquid issue out there. There's some options that do have enough liquidity in them that you can take advantage of it. But again, not the most liquidity involved in the options on the stock, but enough to where we can look for opportunities. So that's going to be our case study consideration for tonight. And with that, so far so good on the voice. Zach, slightly abbreviated presentation so far, and hopefully I can get through a little bit of an extended Q&A. So let's go ahead and go to some questions. And fact that we missed last week, give everybody a few extra minutes tonight.
All right. Yeah, no, that sounds great, Rob. And I think everyone's pretty understanding from the positive feedback we've gotten in the chats. And we both want to thank you for that. We appreciate you taking the time to share, including Fluffy from YouTube says raw Manuka honey is healing for sore throats. So that's probably some good advice from both of us to take. And
I couldn't agree with you more, and that's exactly what's in my throat coat tea. So I'm totally with you. Yeah. So good on you. Awesome. Yep. It's I totally agree.
Yeah. So we've been wish you speedy recovery. We appreciate that. Bill had a question on coin, which you already covered, and again, don't go past anything that you feel you can't. We'll get through as many as we can. So. Larry here would like to look at symbol PI. Do we go to 90 or pull back?
Gosh, it's such a hard thing to figure out right now. Well, I think we go to 90. But your question was, do we go to 90 or pull back? And the politically correct answer here, or the common answer would be perhaps we pull back a little bit first because we are a bit overbought, because 70 was support. We blew through that today, and we're above the 10-day moving average with that gap today. As long as you stay above 70, I think we go to 90 first. I think that's the next move out of this. I think you're onto something good here. It could run to 90 before it corrects. It's a bit overbought. It's not significantly so. And if it wasn't for that doggone gap, I'd say, yeah, we probably go to 90 right away, and we still might. But I just hate those gaps. But I think you've got a good one there. I would stay with that one. As long as you stay above 70, I think you stay long there. And yeah, 90 is coming. And then at 90, we're going to have to take a look at that again, because there's some pretty good resistance there at 90. But you're good to go up till there, even if there's a pullback first. So good one to start with.
All right, and it's my first session back in a few, so I'm going to go to one of my favorite questions I see here from our friend Chris on YouTube. If Rob has time, can we look at yes, Nvidia?
Well, we got earnings coming up on Nvidia. Look at that move, my goodness. Was it 9 or 10 straight days Nvidia has been up? Today may have been 10. It's either 9 or 10, but that's a pretty good move. And now here we are at that round number of 500. I'll put the earnings report on here, and so there's so much commentary on what's going to happen with the earnings. It's on the 21st, so a week from today. So next week we will have a lot to talk about regarding Nvidia, but we're at resistance. Can we break through that before earnings, or is that going to create some sort of resistance moving into earnings? That's going to be the key. So really nice move from 400 to 500 very quickly. But we're at resistance. We got an earnings report a week away. We're a tiny bit overbought. I wouldn't be surprised to see Nvidia take a little bit of a break moving into earnings. We've got a doji today, so clearly indecision right at resistance at 500. But I also wouldn't be surprised to see a day or two of rest and people try to get in front of an expected good earnings report and the stock take off before earnings. So that wouldn't surprise me either. What I don't think you want is I don't think you want it breaking above 500 tomorrow. I think it's a little too vertical and a little too overbought, and that would probably move back down. But sideways for a day or two, then maybe make a break in front of earnings. Who knows? I made the comment last time that Nvidia was priced for perfection, and it was. And so here we are with the last earnings report, and it still ran up. Now, it did come back down afterwards, but it took off right after the earnings report, and they're doing everything right. When you look, I'm not a big fundamental guy. I do like when good technical patterns are supported by companies with good fundamentals, but I'm not a huge fundamental person. But Nvidia, they're making all the right moves. They're in all the right places. But at what point do you get a valuation that has taken all that into account, and you just simply can't, deliver above expectations again? I'm not trying to say they're not going to. They may. I'm just saying that Nvidia has a extremely high multiple, and they do have to come in with stellar earnings, and they may very well do it. But that's one heck of a run. I feel like we probably need to stay calm. If you're long Nvidia right now and you get a break above 500 in the next day or two, I think I'd go ahead and take that in front of the earnings report, as I said, because it shouldn't break above resistance being already overbought, and on a run like that, the likelihood is that doesn't hold. So if you get that opportunity, yeah, I think I would just go ahead and take it. But I can't wait to see Nvidia's earnings myself, just purely from a curiosity standpoint.
Yeah, no, I'm with you there, Rob. I think taking it before earnings would be the right play there. And it just seems like time and time again that, we think Nvidia is not going to beat earnings, and that gets proves us wrong every time.
Yeah,
I guess the
yeah.
continuous acquisitions have a factor in there, but
It's helpful, but they're making the right moves. They're extremely well managed right now. So
that's a fact. All right, so let's get back into the questions. We got a couple questions from our friend Will on YouTube. First one is on bullish on Adobe.
Adobe, is this the Will that won in the YouTube?
It
Uh,
is.
oh, congratulations, Will. Um, I was wondering if that was you. So congratulations. Looking at Adobe, yeah, I was bullish. We had a position on Adobe, probably took it off a little bit too soon, but as I said, been taking positions off maybe a little faster than normally would have, due to the fact that there's still, there's still a lot of concerns out there. But pretty impressed with the move today in Adobe. Also, an earnings report on the horizon. This one's on December 13th. But breaking above this area here is a big deal at 560. And so when you take a look at that, we look at 640 as the midpoint on the wave 5 pattern here. We closed at 604. So it does look like there's a little more to the upside, not tremendously overbought. They're doing well in the whole AI space also, which kind of surprised me on Adobe. But the key here is, as long as you stay above 560, I think you stay long Adobe. If we break below 560, then I think you got to get out. But I think the likelihood is that we probably hit 640 before we come down and test 560 again. But again, as long as we stay above 560, stay long and look at 640 as the a potential target, and perhaps we can hit that before the earnings, and then get out, not have to worry about what happens on that earnings report. One thing we do know is we've had some significant breakout moves. One of our newer portfolios at EWOTrader.com is delta neutral breakouts. And so you visit the website and take a look at those, because on earnings reports, man, stocks have been moving like crazy. And that's that strategy has been doing extremely well.
Yes, indeed. Echo that, and also echo the congrats to Will on entering and winning in that competition that we held. So second one from Will was bearish on FDX.
FedEx, you're bearish on FedEx. So that's a big call, Will. Moving into the holiday season. Gosh, traveling in the airports blew me away how many people are traveling. I know that I've felt a recession is coming. Some really smart bond people that I've quoted, Jeffrey Unlock and Bill Gross, have said a recession is coming. But I can tell you, I did not see that in the airports. Hence the fact that I got sick. People were everywhere. So far, the consumer has held up. And Amazon's gonna be a big deal with what they say with Black Friday. What the Black Friday sales look like. I think that's going to be your gauge, Will, as far as whether or not we can move lower. Obviously, if Amazon comes out and says Black Friday was a little bit of a disappointment, I think FedEx tanks, and that could be your big move to the downside. But so far, the consumer has been resilient and continued to spend. And as long as they continue to do that, as we move into the holiday season, there's an argument for FedEx to go higher too. So I think you got a difficult one here as far as bearish moving back to the downside. Now, the one thing you have is you got a tiny bit overbought here. FedEx is not a stock that's so volatile, so a little bit overbought, but just a little slight pullback tomorrow. I don't think means much. Now, if you do have a good risk appetite, you can stay bearish up to 270. But if we break 270, then you got to go bullish. But up until that point, the whole I really feel like FedEx and UPS both are going to trade according to what the reports come out as far as how the spending looks on Black Friday. At Amazon. I think that's going to be a big key.
All righty, very well. Let's go over to SoFi.
Gosh, I haven't looked at that one in a while. Nice attempt here to hold 7. I think we talked about this before on how important 7 was. You go all the way back to last year and the beginning of the year. We did move up in January. So for the entire year, 7 has been the support level. And at some point in time, perhaps we tried on the last earnings report to get off and take off on a run, but it couldn't hold it. This chart looks crazily familiar, even though they have nothing to do with each other, but UNG, with the fact that they just keep trying to break off a long support level and can't mount a sustained move. But 7's the key here for SoFi. And if you have a longer term horizon, stay long above 7. If you break back down, you probably need to be prepared to see 5. That's probably what happens if we can't hold 7. But as long as we hold 7, you can stay long. Even with today's move, we didn't get above the 50-day moving average, which would have been disappointing. But that's the key. 7's the key. You break down below it, I think you got to get out. As long as we hold above it and you have a longer term horizon, hang on to it and see, because at some point maybe it does catch a bid and take off. Especially with rates coming down now. I mean, that could be very helpful to it.
Yeah, absolutely. That's a good point. How's the voice feeling over there?
We're borderline.
Borderline. All right. Well, as soon as it's time,
not as much excitement or energy behind the voice as possible, but that's on purpose, because you can feel that. You just can feel that twinge back there on the call.
Yeah, know it far too well.
Hanging in there.
All right, we'll do a few more then. Let's look at Tesla.
Yeah, we got to look at Tesla. It's been a while. And I imagine most people have seen the video now. It was great when Elon was on with Joe Rogan, and he brought the Cybertruck there, and Joe Rogan was convinced that he could shoot a bow through the hull of the Cybertruck, and Elon's like, I don't think so. I bet you $1. Joe shoots his crossbow, and it hits the car and destroys the bow basically, and puts just a tiny little scratch on the car. So that was pretty darn good marketing, and I don't think Elon had to pay anything for that. It's just Joe's saying that he thought it would go through, and anyway, it was pretty interesting stuff. So we're holding here at 200, which is the level on Tesla. If you're bullish, which I know most people are on Tesla, you wanted 200 to hold. It has so far today. Got back above the 50-day moving average, which is key. Before you can get too excited on Tesla, though, you got to get above 260. So we're kind of in a range here between 200 and 260. You can see that's pretty much where we've been since we broke above there in June. So since above early summer, we've been primarily between 200 and 260. If we can break above 260 with follow through, then we got a chance on Tesla to take off. But that has to happen first. So where do you go from here? We're kind of in no man's land right now. If we broke below 200, then we probably have a pretty quick downside trade, but we didn't. We held it. We could move it up to 260. I think with Tesla now, it's a wait and see. Hard to make a call on what direction there, but certainly an entertaining video to watch if you haven't seen it.
Yeah, absolutely. And no, I was just gonna add in, I was talking to Will here, saying that Will wants to buy puts on Tesla and might rally on the Cybertruck release, but next year looks bad. And that's the only reason I'm cautious with Tesla is due to manufacturing concerns, but still see a rally with that Cybertruck release. And
well, that is interesting that you say that, Zach, in chatting your conversation there with Will. In that same video, Elon almost incessantly kept talking about the concerns with manufacturing and how hard manufacturing was. And it got to the point where he was saying it so much you had to wonder, is he trying, was that like a sneaky warning? Or was he just aggravated? Did something go wrong that day and he was just in a bad mood? But he did keep talking about how difficult manufacturing was in the auto industry. So, I can see where you could take a look at that, Will, and use that as maybe some sort of a bullish signal there. It's hard to imagine. I guess we won't know until we get to the next earnings cycle, which is until January, on whether or not he was, trying to warn us or not. But he certainly was aggravated about manufacturing in that same video. That's for sure.
That is interesting. Well, I empathize because I'm in a similar state as you are, and I can tell that voice is running on E. So how about we do one more for?
Yeah, if there's two more, let's do those, and then I think that's going to be bad.
Many more than two more. We always have so many great questions, but again, in general, we'll never get through all of them just with the time constraints. But I think everyone is understanding.
I think about
special circumstances.
Thank you. I think about two more is about all I got in me. I feel like it's about to erupt here. So
yeah, absolutely. All right,
I'm amazed that I got this far. It's better than I did yesterday. So I guess I'm getting better.
We all appreciate it. Let's look at Mara real quick.
Which one? Which one?
MARA.
MARA. Okay. Oh, yes. Marathon Digital. Okay. Had a attempt there back in August to move to the upside. We just had an earnings report, which absolutely nothing happened. So we have a real sideways pattern here. Let me get this off. Aggravating. You're at a major point of support resistance here. around 9. I would have a hard time. This is what you want to see, and this is what the potential is right there. If we can break above 10, I think you get another one of those runs as you start to perhaps get some more institutional interest in there. But as far as where we are right now, I think, again, you wait and see. 9 to 10 is an area here. 11, certainly you're good to go. But this block here between 9 to 10, going all the way back to April. But I feel like if we can break above 10, you could see one of these, and this is what you're looking for. I would imagine whoever asked the question, will we get another run like that? If you can break above 10, I think you might. But I think you need to see a move above 10 with follow through. So that means 2 consecutive days above 10, closes above 10, and then you can look to go long. But as far as right now, I think you just have to wait and see.
Alrighty. Well, it was great to be back with everyone. We'll wrap up with this final question. Again, just want to thank everyone for their kind thoughts, well wishes, and understanding. We will look forward to being back, both Rob and I think I can speak for there, being back to 100% here soon. And also, Jeff, if you're hearing this recording, you had a lot of positive feedback, but I'll be sending you a report of that. So thank you all for sharing that as well. Let's end this session with some jazz.
Jazz. Oh, that shows you how out of it I am. I actually thought you wanted me to play some jazz music.
Either one would be fun.
I used to be in a jazz band, so old former trumpet player here. Yeah, pretty ugly couple of days here in the beginning of November. We've bounced back, but all we did was retrace an oversold condition. I always talk about how I don't like it when things go vertically up. The same thing works the opposite direction. So we went vertically down, so we're going to get a bounce back up, and we bounced back to the 10-day moving average. We're still in a 5-wave to the downside pattern, although barely holding on at that 78.6% fib level. Pharmaceuticals are just so difficult, and they seem to be even more difficult now than in the past. But your key here is 130. So I think unless we can break above 130, you have to be extremely cautious. Break back below 120, I think you go short. But a break above 130, I think you can go long. So where are we now? Right in between those two. So that's the difficult thing, is it's hard to, I think this is another one of those, sometimes seems like we get a number of potential longs or shorts. It seems like tonight we've got a lot of, kind of wait and see, let the market tell you type of scenarios here. And this is one of those. So a break above 130, I think you go long. A break below 120, you go short. Other than that, I think you have to just wait and let it tell you which way it's going to go. It did break below 120, but it did it in such an oversold fashion that it snapped back. It's like stretching a rubber band. You stretch it so far, and then boom, you let go, and it snaps back. That's what happens when you get these vertical moves in the market, is you get those snapbacks. So that's where we are, and we're kind of right in between that channel between 120 and 130. So that's the range that I see there, and whichever level it breaks, support or resistance, I do think you have a pretty nice trade there, either direction. But I think you need to let it tell you which of those two directions that's going to be. So thank you for putting up with probably not as much volume as normally behind the voice. I am super excited that it made it this far. I was concerned after what happened yesterday. But thank you so much for all the kind comments. I appreciate it very much. And hopefully by next week we'll be back at full strength, because I've about had enough of this. I can tell you that. But thanks for your attention. I almost made it. Thanks so much. Have a great night, and we'll see what happens throughout the rest of the week. We got the PPI report tomorrow, but with the CPI report today, I don't know that the PPI report can really change too much of what happened. But we do need to consolidate a bit in the market with what happened today. Thanks, everybody.